Imagine being able to invest in a company like Tesla or Amazon right before they went public, watching your investment potentially soar. For many, that's the dream with SpaceX, Elon Musk's groundbreaking aerospace company. It's pushing the boundaries of space exploration and satellite internet with Starlink, capturing the world's imagination. But unlike publicly traded giants, SpaceX isn't on the stock exchange. Yet, the excitement around its potential initial public offering, or IPO, is palpable, and many wonder how they can get involved now. Before we dive into how to buy SpaceX stock, let's clarify what an IPO actually is. IPO stands for Initial Public Offering. It's the moment when a private company, like SpaceX, first offers its shares for sale to the general public on a stock exchange. This allows anyone with a brokerage account to buy a piece of the company. Companies do this to raise capital for expansion, pay off debt, or reward early investors. Think of it as a company opening its doors to the public market for the very first time, allowing broader ownership. So, why would anyone want to buy shares before an IPO? The primary appeal is the potential for higher returns. When a company is still private, its shares often trade at a lower valuation than what they might achieve once they hit the public market. Early investors take on more risk, but in exchange, they could see significant gains if the company performs well and its valuation increases dramatically by the time of the IPO. It's like buying a property directly from the builder before it's listed on the open market, hoping its value appreciates significantly. Now, for the core question, how do you actually buy SpaceX stock before its IPO? While not as straightforward as buying publicly traded shares, there are indeed three main avenues for acquiring a piece of SpaceX pre-IPO. These methods involve navigating the private investment landscape, which operates quite differently from the public stock market. Furthermore, you'll want to mark your calendars because the SpaceX IPO is expected to take place on June 12, with a projected market capitalization of around $1.75 trillion. Let's break down these distinct pathways. The first way to potentially buy SpaceX stock pre-IPO is through private secondary markets. These are platforms where existing private shareholders, like early employees or venture capitalists, can sell their shares to other qualified investors. Think of it as a private club where members trade assets among themselves, rather than a public auction. These markets are not open to just anyone, they typically cater to accredited investors, a term we'll define shortly. These platforms facilitate a direct transaction between a seller who owns SpaceX shares and a buyer looking to acquire them before the official IPO date of June 12. On these private secondary markets, a seller who holds SpaceX shares will list them, often with a specific price or a range they're willing to accept. Prospective buyers, usually institutional investors or high-net-worth individuals, then place bids. The process involves significant due diligence from both sides, as information about private companies is not as readily available as it is for public ones. These transactions are often facilitated by specialized brokers or platforms like Forge or EquityZen. The goal is to match sellers looking for liquidity with buyers seeking early access to companies like SpaceX, all before the June 12 IPO. While private secondary markets offer a pathway, they come with challenges. One major hurdle is access. These platforms are often exclusive. Another is valuation. Since there's no public market, determining a fair price for SpaceX shares can be complex. You're relying on negotiated prices, which might not always reflect the true underlying value. Furthermore, liquidity can be an issue. It might be hard to sell your shares quickly if you need to, unlike with public stocks. These shares are also typically illiquid until the actual IPO date on June 12. Or even longer, adding to the risk. The second way to gain pre-IPO exposure to SpaceX is through venture capital firms or specialized investment funds. Instead of buying individual shares directly, you would invest in a fund that holds a portfolio of private companies, including, potentially, SpaceX. These funds pool money from many investors and then use that capital to invest in high-growth, early-stage companies. Many venture capital firms were among the earliest investors in SpaceX, making them significant shareholders. By investing in such a fund, you're essentially getting a diversified stake in the private market, which may include SpaceX, long before its public offering on June 12. Venture capital funds typically invest in companies during their growth stages, providing capital in exchange for equity. For SpaceX, various VC firms and private equity groups have participated in multiple funding rounds over the years. When you invest in a fund that holds SpaceX, you're not directly owning SpaceX stock. Instead, you own units or shares of the fund itself. The fund's performance then reflects the collective performance of its underlying holdings, including its stake in SpaceX. This approach offers a way to get exposure without directly navigating the complexities of individual private share purchases, especially before the June 12 IPO. A crucial point for both private secondary markets and venture capital funds is the concept of an accredited investor. Regulatory bodies like the SEC in the US impose this classification to protect less experienced investors from the higher risks associated with private placements. To be an accredited investor, you generally need to meet specific income or net worth thresholds. For individuals, this often means an annual income over $200,000 or $300,000 with a spouse for the past 2 years, with an expectation of the same in the current year. Alternatively, a net worth exceeding $1 million, excluding your primary residence. This requirement ensures that investors engaging in these high-risk, pre-IPO opportunities, including those eyeing SpaceX before June 12, are financially sophisticated and can absorb potential losses. The third way to acquire SpaceX shares pre-IPO, though perhaps less direct for the average person, is through employee stock options. SpaceX, like many private high-growth companies, grants stock options or restricted stock units to its employees as part of their compensation package. These options give employees the right to buy company shares at a predetermined price, usually much lower than the eventual IPO price. This is a powerful incentive for employees to contribute to the company's success. For an external investor, this isn't a direct buying method, but it forms the basis for some of the shares traded on secondary markets, as employees may seek to sell their vested shares. Once employees' stock options vest, meaning they gain full ownership of the shares, they have the option to exercise them, essentially purchasing the shares from the company. At this point, these employees become private shareholders. Should they need liquidity or wish to diversify their assets before the SpaceX IPO, they can choose to sell these shares on the private secondary markets we discussed earlier. So, while you can't typically apply for a job at SpaceX just to get stock options, understanding this mechanism reveals how a pool of shares becomes available for pre-IPO trading, feeding into the avenues we've already covered, all before June 12. Let's bring our focus back to the big event. The SpaceX IPO is officially expected to take place on June 12. This date has been highly anticipated by investors, analysts, and space enthusiasts alike. Mark your calendars, because this is the day when SpaceX will transition from a privately held company to a publicly traded one, making its shares accessible to a much broader audience. This event represents a massive milestone for Elon Musk's enterprise, validating years of groundbreaking work in rocketry and satellite technology. It will be a pivotal moment for the future of space commercialization. And what an IPO it's projected to be! On the SpaceX IPO date, the company's market capitalization, or the total value of all its outstanding shares, is expected to be around a staggering $1.75 trillion. To put that into perspective, that would immediately place SpaceX among the world's most valuable companies, potentially even surpassing some long-established tech giants. This valuation reflects the immense potential investors see in SpaceX's multiple ventures, from reusable rockets and moon missions to the rapid expansion of its Starlink satellite internet service. It's a valuation that underscores the disruptive power and future growth anticipated for the company. A $1.75 trillion market cap for SpaceX is more than just a number, it represents a bold statement about the future of space and technology. For comparison, this valuation is roughly equivalent to the entire GDP of a medium-sized developed country. It suggests that the market believes SpaceX's innovative technologies, its ambitious goals, and its current revenue streams, particularly from Starlink and government contracts, position it for unparalleled growth in the coming decades. This anticipated valuation on June 12 sets an incredibly high bar, but one that reflects the unique, transformative nature of SpaceX's mission and operations. Now, let's briefly compare the advantages and disadvantages of pre-IPO investing. On the pro side, there's the significant potential for higher returns if the company performs well post-IPO, as you're buying at an earlier, typically lower valuation. It also offers exclusive access to high-growth companies like SpaceX before they become widely available. However, on the con side, pre-IPO investments are inherently riskier due to less available information, illiquidity, and complex valuations. There's also the high entry barrier, often requiring accredited investor status and substantial capital. It's a trade-off between potentially explosive growth and higher risk. It's crucial to understand that investing in a pre-IPO company like SpaceX isn't without significant risks, even with the projected $1.75 trillion market cap. The company's future performance is not guaranteed, and the valuation could change. Private companies are not subject to the same rigorous disclosure requirements as public ones, meaning less financial information is readily available for investors. The share price on secondary markets can also be highly volatile, reacting to private news or rumors. There's always the chance that the IPO itself could be delayed, or the eventual IPO price might not meet pre-IPO expectations, impacting your investment. Two specific risks worth emphasizing are illiquidity and valuation challenges. When you buy shares in a private company, you generally cannot easily sell them whenever you want, unlike public stocks. Your investment might be locked up until a liquidity event, like the IPO on June 12. Secondly, accurately valuing a private company can be incredibly difficult. Without a public market, pricing is often based on private funding rounds or negotiations, which might not always reflect what the broader market will pay. This uncertainty can lead to significant discrepancies between the price you pay pre-IPO and the eventual public offering price. Given these risks and complexities, it's clear that pre-IPO investing in companies like SpaceX is not for everyone. Primarily, it's for accredited investors who have the financial means and sophistication to understand and absorb these risks. For non-accredited investors, the direct pathways like private secondary markets are largely inaccessible. However, indirect exposure might be possible through certain crowdfunding platforms that aggregate smaller investments into funds that do invest in private companies, but these are rare and still involve significant risk. Always consult a financial advisor to understand if such an investment aligns with your financial goals. So, is buying SpaceX pre-IPO the right move for you? It depends entirely on your financial situation, risk tolerance, and investment goals. If you meet the accredited investor criteria, have a long-term investment horizon, and are comfortable with illiquidity and high risk, then exploring these three avenues might be worthwhile. However, for most individual investors, waiting for the official IPO on June 12 might be the more prudent and accessible option. While you might miss out on the very earliest gains, you'll benefit from the transparency and liquidity of the public markets, and still get in on a company poised for incredible growth. To recap, if you're looking to get a piece of SpaceX before its highly anticipated IPO on June 12, there are three primary ways. First, you can explore private secondary markets, buying shares directly from existing shareholders. Second, you could invest in a venture capital fund or specialized private equity fund that already holds SpaceX in its portfolio. And third, while not a direct buying method for most, understanding employee stock options reveals how some of these shares become available. All these options mostly require you to be an accredited investor, emphasizing the exclusive nature of this pre-IPO landscape. As we look ahead to June 12, the expected SpaceX IPO date, the company stands at the precipice of a new era. With a projected market capitalization of $1.75 trillion, SpaceX is not just a company, it's a testament to innovation and audacious ambition. Whether you choose to explore the pre-IPO avenues or wait for its public debut, understanding these pathways gives you a clearer picture of the investment landscape. The journey to Mars, global satellite internet, and the commercialization of space continues, and soon, a wider range of investors will have the opportunity to join the ride. What are your thoughts on SpaceX's valuation? Let us know in the comments below.